Hello and welcome to the latest edition of our FI Leaders View. I'm Dean Frankle, the Regional Head of our Asset and Wealth Management practice, and I'm delighted to welcome Chris Hill, the Chief Executive of Hargreaves Lansdown. Chris, thank you for being with us today. You've been with HL 7 years. A lot has happened in the world. There's been government instability, war, COVID. Clearly, this has all had an impact on the financial institutions practice and the wealth management industry at large. I'd love to hear from you on how that's actually changed things.
I think we've had 5 prime ministers, 3 presidents, got war in Europe, we've got inflation, cost of living crises, and pretty volatile markets all the way through. And, the concoction, the cocktail of all of that, I think has had an enormous impact. At a time when there are these big secular trends anyway, people living longer. Here in the UK, the savings investment landscape has not got any simpler. It's more complicated, if anything. Low interest rates, and we're certainly going through a change in that cycle. And what we've seen is just more and more people now, they have to take control of their money for the future. And they need help to be able to do that. And then you've got other trends that come through as well, that particularly when we saw it through the pandemic. During the pandemic, people had time and a lot of people had money because they weren't going out and spending it. And so they started to get engaged. And you got this massive acceleration of digital interaction, which I think is a real seismic change for the future of the industry. But people want help, support, knowledge. And that's, I think, the real challenge for the industry in terms of how you provide that. And that will shape actually how the industry addresses that over the next few years.
And talk about the difficulty of doing that, because obviously financial institutions, financial services has a bit of a bad rap sometimes about taking advantage almost of customers in high interest environments, not passing on all the interest to customers. There's also another challenge where financial institutions and financial services is difficult. Financial literacy isn't as high as it should be.
Good question, because how that issue is approached actually probably defines whether you're successful or not. And that approach needs to start, as you say, with the consumer. And these are people we've just been talking about, right, who are, they're busy in their everyday lives. They're under huge amounts of pressure, even more so financially now. And they're the ones that need help. And you mentioned literacy, and literacy in terms of knowledge. There's very, very little knowledge of saving investment and how to go about doing that. And I think, we support Just for Finance Foundation, so we do a lot of supporting education in schools, and that's really, really important. But actually, you've also got post-school, you've got young people in the workforce, and actually that runs through to, I'm talking relatively young, so up into the 30s too, when people are now starting to think, well, actually, how do I start investing? I think there are 2 key attributes of any successful investor. Number 1 is engagement. They are always engaged in what they're trying to do. By definition, they are, but that engagement is important. And the second one is they've got confidence. And by confidence, I don't mean they're Warren Buffett or George Soros or anything like that. That's not the point. They understand what it is that they're trying to do. They're building up their knowledge, and they are confident in how they go get help, how they execute what it is that they're trying to do. And something the entire wealth industry needs to be focused on is how you build engagement. That is absolutely fundamental to solve what is essentially a huge issue for society. If people aren't saving, we talk about the pension savings gap, but it's building up knowledge, and there has to be real focus on how you build up knowledge.
If I were to paraphrase what you're saying, it's actually probably not just the financial institutions kind of need. There's also a broader government agenda, and it's a bigger problem to solve for over the longer term.
Absolutely. I think, when you get a challenge such as this, the way that you address it is by you bring all parties together. I mean, we've pushed for a long term, and I'm now really pleased to see the regulator and the policymaker, Treasury, working together on a review of the advice and guidance regime, because our fervent view is, look, there's an advice gap, but it's not about advice, it's about how you help people and how you help people at scale. And all of the experience that we've built up over the last few years is the more that you can personalize the data that you have and use the data that you have around people to get people engaged, we're already on the journey to improve that. So this idea of personalized guidance, which allows providers to use the data and experience that they glean to make it relevant to individual consumers. The fact you've got a regulator now that's thinking about outcomes-based regulation and talk about the consumer duty, but that's what it does. And so I think actually there's a combination of providers, policymakers and regulators coming together that can really impact how this works. And I think we are at quite an exciting inflection point, because we have got those secular changes. We've got people who have got much more of an appetite to do things digitally. And we've got the technology that's able to support that. And whilst the human connection in managing people's life savings is really, really important, the capability of providers now to be able to develop a relationship digitally is a huge game changer.
Just going back to one of the points you mentioned before about the kind of what regulators could do, what government could do. One of the things they have done is say there's probably more money that needs to go into longer term investments, long-term asset funds and vehicles, where money should probably be locked up for longer periods to fund more longer term projects, infrastructure, toll roads, etc. I'd just like to hear from you about how you think that will change the investing landscape, how important that is for the future of wealth management.
Well, I think the long-term asset fund, which came out of, again, it was industry, Bank of England, regulator, Treasury, all working together on productive finance. And essentially what the long-term asset fund is doing is enabling investment into long-term infrastructure, biotech, growth, all of those things, but linking the redemption of assets to the nature of the assets. That's important because it's more of an enabling mechanism. I think you've then got the context of investors. It's not right for everybody, but there will be a significant proportion that it is right for, because you go back to actions taken. And so I go back to auto-enrollment, which has been going for, 10 years now. So you've got people contributing, about 7% or so into their pension. They're building up quite big pots, and they are relatively young coming in to do that. They've got a long way to go. So these are sorts of opportunities that they might well be thinking about. And as they grow and develop and become just more sophisticated in the level of wealth that they've got, diversification is really, really important. And for retail investors, getting diversification beyond equities, the pooling of funds and bonds and something similar is actually quite difficult to do. This offers a different route. So for a proportion of your funds, it's just an interesting opportunity. Now, at the moment, it's very focused around pensions. You've got the challenge of pension trustees and how that whole world works. Our push has been open that up to the ISA population, because those invested in ISAs as well generally will have pensions, they'll have ISAs, they will be engaged, and they'll be able to think about that broader diversification, and they'll probably want it too. So there's an opportunity there.
And you've mentioned diversification a few times. I think maybe if we just spend a minute or so talking about that in the broadest sense, because I think there's probably also diversification into broader private assets, into real estate, also maybe even to crypto to some folks. Maybe just to give your views on what you're seeing in terms of diversification in the UK, away from maybe more traditional multi-asset funds into a broader array of opportunities.
So number one, crypto, I wouldn't put in investment class because A, because you can't from a regulatory perspective. B, because it's very unclear what sits behind that anyway, and we've seen all sorts of issues with that. So I push that one off to the side and just see how it develops. I think for most people, there is a very simple portfolio that they need to start to build up, which you can do through funds, pooled funds, through equities, bonds, and the multi-asset fund has been the way that it's been done. And you see a lot of people focused on a managed portfolio, which gives you that balanced mix. Once people start to build out from that, then there are areas they're more interested in. They would recognise, actually to go into the US, perhaps I'd like to have a more active approach, or a particular market anyway, a more active approach. And then as they build out geographical diversification, they're looking for another form of diversification, and those sorts of alternatives give you access to that. So I think that's how you see it broadening out, and you find technology themes or biotech themes or medical themes that people then want to add that into a portfolio, and I think that's where it gets quite interesting in terms of as people's sophistication builds, how you help them to access those other sorts of opportunities. But there's no one size. I just don't believe one size fits all. I think there are basic building blocks that you put in place, but then people will want to construct over and above that.
How would you expect that to evolve? So you've spoken passionately in the past about the future of wealth management. Like, what do you see that looking like in a few years' time, and maybe what more in the next 18, 24 months?
The future is just much more personalised. We are completely a digital player, essentially. 98% probably is digital. For us, the attention span is really important, and the attention span is only about 8 seconds. So you have to be able to attract attention and then convert that intention into engagement. And you don't do that by a mass data dump. That's not the way it works. It happens iteratively over time, and you build up people's curiosity as their knowledge builds. And that has a great circle with confidence that helps people to move on and do. So what the providers need to do is become increasingly more personalised, and the challenge is, how do you do that at scale? The answer to that is digital cloud-based technology, because what that is doing is making really fast and effective use of data. And through the presence of being the cloud, it makes you a lot easier to be connected. And this is what people will increasingly expect. So there is the ability to be able to link into somebody's bank account, to be able to have that data and have a good understanding of how their whole household budget works. And then with a framework to help them to build up their rainy day savings, ensure that they're investing long term for the pension, and then make sure that they're making the most of their other investments. And it's how you use data and the engaged relationship to help them to build that picture up over time. And I think there's so much talk about AI and what impact AI might have, but rather than think about the technology itself, think about the nature of the consumer and what's going through individuals' minds. How much can I save? What's coming up next? What is the next thing that I need to do? It's never been a good model to ask people, well, so what's your risk appetite? That's not what somebody on the street will talk about. They'll talk about what makes them feel comfortable, what they're looking for, what they're worried about. And I think there's lots of AI that actually really helps with that.
So what is your view in the future of how Gen AI capability is kind of helping you or another wealth manager in interacting with clients? Are there any other use cases you see actually in the wealth space?
So the answer is data. So really we're saying, right, how can you sift and understand and analyze data fast? Yeah. And that's what the solution becomes. But in what ways? It's predictive. It can help you understand what people's next reactive action might be. And if you can join that together with an understanding of the impact of events, how things might impact them as an individual, the thought that they would have, and then you're helping them to the right. So imagine if you could ask people a set of questions about, if I gave you £5 now, but actually I could keep it, and you've got the possibility of £6 tomorrow, what would you do? You can iterate around that. That actually gets you far better insight into, and there's a sort of a gamification around that. It doesn't have to be that sort of a binary conversation. You can understand people's attitudes to risk, actually, how they do think about the world. Then imagine if you've got a set of data that helps you to understand how people generally react through different market cycles and different events. And we know that it's valuable communication with our clients when there are market shocks to say, just take a long-term perspective. This is how these things pan out over time. Imagine then if through targeted, personalised communication, you can actually really be engaged with consumers all the way through. That's much more personalised. That's much helping them in the moment to understand how to manage their money. That's why I think the future is so much more connected. It's data-driven, but it's got to be personalised.
We've spoken clearly about a flurry of different things, be that the future of investment and future of advice, financial education, financial literacy. These are all topics that are front and centre of your agenda, others in the industry. Are there any other topics where you think they should be front and centre, but they're not?
It's always the client. It's always the end user. How are they thinking? How do you help? And how do you build them up? So there's really interesting work that's being done around distributed ledger technology that will make admin so much easier. That's sort of an efficiency piece, but also you make that practical, and it means we should make administering things easier for individual people themselves. So, one of the things we really push for is let's get everybody to have one pension pot. If you look at millennials now, the multiple of jobs that there's one, I can't remember the stats, but there's one generation, our generation maybe, that has 3 jobs in a lifetime. If you look at the people coming into the workforce now, it's more likely they're going to have 5 to 10. Well, if you make them open up a pension for each of those, that's 10 pension pots. If you have the ability to say, actually, you can just pay into the one pension pot, it's much easier to get people's focus and get people engaged. And you need to have a way of tracking and managing that. Well, that's what distributed ledger technology, that's the sort of thing that it helps you to do really, really well. And I think if you stretch it out, it's also how you help to construct portfolios that are really appropriate to the individual. Now, I don't know how far that goes, but I do think, this is all about how you leverage technology to the benefit of the end user and what their concerns are. And I don't think the answer is one size fits all. And I think when you get to that stage, in the past, it's always been, you get into you have to be high net worth or ultra high net worth, and we know those business models, just how people intensive they are. Well, you can't do that at scale. You've got to use digital technology to do that.
Chris, really, really insightful. And just as you speak, it makes me realise how far we've come as an industry, but actually how far there is to go. Look, thank you again for your time today and for being with us.
Thanks, Dean.